Chapter 16 is on the statement of cash flows. The good news is that there are no journal entries in this chapter. However, you will need to learn how to prepare a full statement. This chapter has often been a trickier chapter because you need to really understand the financial statements in order to really understand the preparation of this statement. Also, there are so many variations of this statement. Each statement from each business will look different in terms of what gets put into the statement, not on the format. This topic is also covered in an intermediate accounting course in much more detail. So I'm going to try my best to only cover the basics and not overcomplicate this topic. We have 4 topics that we will cover in this chapter. First, we're just going to go over some basic information about the statement of cash flows, which will be covered in this video. The next 3 topics will be on each of the 3 parts of the statement of cash flows, which would be the operating section, the investing section, and the financing section. Our first slide is on the importance or purpose of the statement of cash flows. The statement of cash flows reports cash receipts, known as inflows, and cash payments, known as outflows, for a period of time. It answers important questions such as, what explains the change in the cash balance? Where does a company spend its cash? How does a company obtain its cash? Why do income and cash flows differ? Information about cash flows influences decisions. It helps users decide whether a company has enough cash to pay debts, evaluate a company's ability to pursue unexpected opportunities, and helps managers plan day-to-day operations and make long-term investment decisions. There are 2 methods for reporting on the statement of cash flows: the indirect method and the direct method. These 2 ways of reporting only apply to the operating activities section. The direct method separately lists operating cash receipts and operating cash payments. Cash payments are then subtracted from cash receipts. The indirect method reports net income and then adjusts it for items that do not affect cash. It does not report individual items of cash inflows and cash outflows from operating activities. The total of the operating activities section is identical under both the direct and indirect method, but how we get there is a little different. In this course, we will be covering the indirect method only. The reason is because this is the most commonly used method and is usually easier to prepare and to understand. Sources of information for preparing the statement of cash flows are the comparative balance sheets, which means we need more than 1 year's worth of information. We need to compare the most recent year with the prior year. We need the current income statement, and sometimes we need additional information. Additional information can help us differentiate between cash and non-cash activities. Cash receipts and cash payments are classified and reported in one of 3 categories. First is the operating activities category. This includes transactions and events that affect net income, with some exceptions such as unusual gains and losses. Investing activities include transactions and events that come from the purchase or sale of long-term assets. Financing activities include transactions and events that affect long-term liabilities and equity. We also have a non-cash category, however, it is not really classified with the other 3 main categories. I'm going to talk more about this section on the next slide to basically get it out of the way so that we can focus on the main categories. The non-cash investing and financing section includes activities that do not affect cash flows. Examples include retirement of debt by issuing stock, conversion of preferred stock to common stock, lease of assets in a capital lease transaction, purchase of long-term assets by issuing notes or bonds, exchanging non-cash assets for other non-cash assets, and purchasing non-cash assets by issuing stock or bonds. Those are just some of the examples. Non-cash investing and financing activities are disclosed in either a note to the financial statements or in a separate schedule to the statement. which is why it's not part of the three other main categories. This slide is on the format of the statement of cash flows. You will list cash flows by the categories of operating, investing, or financing activities, and identify the net cash inflow or outflow in each of the categories. Then you combine the net cash flow from each of the three categories to identify the net change in cash for the period. Combine the net change in cash with the prior period ending cash to prove the current period ending cash. This is basically your check at the end. We actually know what all these numbers at the bottom are supposed to be. If after preparing the statement of cash flows, you don't get the correct numbers, then you know there is a mistake in the statement.